Now, first of all, what is the first stock I'm going to look at? The first stock I'm going to look at is Netflix. All right, Netflix and chilling. How many of you ever did that before? Comment below if you've done that before. All right, you haven't lived till you did it. So anyways, boom. One touch, two touch, three touches of support. Okay, so I like to draw my box here just to give me like the zones that I like to buy in. As you can see, I have two buy zones. And what I call this, and what most investors call this, is dollar cost averaging. Now, I like Netflix because it's on its third touch of support. It could potentially have a little bounce here, and we can kind of dive deep into the technicals. All right, so I can show you guys how I personally chart. First of all, I got to bring up my indicators, and I only use two of them. This is the MACD, and I'm going to show you guys real quick. We can move this up a little bit. Hold up. All right, there you go. You guys can see it now. We have bullish divergence on both indicators at a key level of support. This could turn bullish. All right. So we have bullish divergence on the RSI, which is this top indicator, and then the MACD, moving average converge and diverge. Now, what does that mean? That means the stock itself is making a lower low, but the MACD and the RSI is making a higher low, which foreshadows an uptrend, and it's doing it while it has what? A form of support here. Okay. So that's first and foremost. Then number two, I want to buy leaps here. So even if I can catch a short-term pop here, I want to buy leaps here in the 70s, the low 70s, and buy an option just in case it bounces here in the high 80s. Now, I did buy some shares. So what I recommend is going half size if you're buying shares. So think about it. If you got $1,000, put in 500 here, then 500 here, if that makes sense. 10,000, 5,000 here, 5,000 here. So I'm only putting in 2 entries for Netflix. Now I like it on the short term because of that. Let's go to the 4-hour chart because I like to break this down. That's when I get rid of the MACD and the RSI and everything. And now it's time to see. You see we're in this channel here, right? So this is called a channel whenever you see a stock just, you know, moving within the channel. And that's why I go to the 4-hour chart, because now I can see, okay, if it breaks this trend line, it could really make a strong move because it's in this channel that's been in this channel for some months, nearly a 3-month channel. And if you don't know what a channel is real quick, channel chart pattern, that's all it is. It's moving within a channel. You guys are learning some new stuff here. All right. So you guys get that point. We see that Netflix is in this price channel. It breaks this price channel. If it breaks above, and I'll even give you guys an entry point, if it breaks above 85, it could really make a strong move, especially the fact that it's at a key level of support here. All right, breaks above 85, it'll break the channel and bounce off this key level of support. I like Netflix for a potential long here above 85, and that would be my first stock. Now we got to get into the second stock, okay? So I gave you guys a game on that. Before I do that, first, let's go and look at Netflix balance sheet and tell you guys why I like it. For leaps, we have rising year-over-year growth in revenue. I like to see just growth here. Now, does this always translate into profitability? Of course, now I got to go look at, are they projected to make more? I got to go look at what analysts are saying, things like that. But I'll just break this down real quick. All numbers are in thousands, so you got to add 3 zeros to every number you see. And this right here is their total revenue. So this is not net. This right here is net. All right. And this is, they're making actually a good margin, because think about it. Total revenue was about 45 billion, and this is trailing 12 months. But because we're in January, this will look the same, if that makes sense. Trailing 12 months means if it's February, then they're going back to February 2025 to look at data. If it's June, then the trailing 12 months will be the last 12 months, if that makes sense, the trailing 12 months. So again, you got to add 3 zeros. So 45 billion and almost making 11 million. That's nearly like a 24, 23% profit margin or a 25% profit margin. And that's pretty good, folks. That's pretty good. I'm not even gonna lie to you. All right. I like them for a leap. This is a chance to get Netflix at a cheap price, not only in your portfolio. Again, remember what I told you guys to do, but also to buy some leaps, especially if it gets to the 70. That's the area I really wanted at for leaps, if it can get there. But, you know, if you not afraid of red, then you can buy leaps now. But I really want leaps there. And why? Because it's previous all-time highs. And if we go to the daily chart, you guys will see that whenever it loads. There we go. See how it was all-time high here? And then it rejected. And then it tried to break all-time highs again, then rejected. And then finally broke it. So if it gets to this level again, Of course, this is previous breaking retest of all-time highs. And I would love this area for leaps. This would be the most perfect area, ideal area for leaps for Netflix. The low 70s, even if it gets to 72-ish, I would just go ahead and just start averaging in, you know what I'm saying, low 70s. Now, let's get into my last stock, all right? And that would be Texas Instrument. Remember those calculators we used to use? We used to get them for free in school. I don't know what school system you guys went to, but, you know, they actually gave us free calculators to use. Now, of course, we couldn't take it home. Sometimes we could, but they were very high tech, those calculators. Now we got ChatGPT, things like that, which is even better because we used to have to plug and play the formula by ourselves. That's neither the point. Do you guys know what pattern this is? I was about to say it. You guessed it. Like we're playing Dora the Explorer. The bull flag pattern. All right. As you guys see right here, we have a flag pattern. And by the way, I missed my flag pattern on HD. Man, this is why and it was perfect textbook. And I just decided not to play it today. I don't know why. Don't ask me why. This is why you must set alerts, folks. So I missed my flag pattern on HD. Texas Instrument. We have a flag pattern again, and it could blow the top off. As long as I see a flag pole, which we have right here, and if we go on a 4 hour, you can see it. As long as I see like a flag pole, I'm good with the flag pattern. So we do have that. And for these, I would recommend maybe short dated options. And I'll tell you the options I like for both.
I'm looking for a small company that has a dominant technology with a massive demand for their products and massive market. And that's how you get asymmetric upside. Alrighty, so let's go to the next stock, which is going to be SoFi. So I covered SoFi yesterday or today, depending if I want to double upload or not. Because yeah, I usually don't double upload, but because I don't know how many videos I can even make until YouTube gives me another 2 weeks off, not intended vacations, then yeah, I might double upload. So it's SoFi. Been covering it yesterday or today. It's at around 21 bucks, right? It's probably not going to move much this week. We're probably going to be between the range of 21 and $23. That's my guess. I like the stock a lot. You know I like the stock a lot because I covered the stock a lot. I've been in the stock for a very long time. Kind of like Palantir. I've been covering Palantir since IPO, and I've been covering SoFi not that much after that. So it's been a nice, juicy ride. Despite all the volatility you see right now in the market, because I've been in these stocks early, anyone that's been with me and my team early, we've been making money. Maybe this week's been volatile, but I don't look week to week. I don't care about week to week. I care about year to year. Nobody says that. Nobody talks about that, right? Year to year. Yeah, everyone's like, this week, this day, this minute, how much money am I making? Guys, I don't care about that. I don't care about that. I care about what, like, next year. Like, what can we make next year? Where are we going to be at? Or are we going to make a lot of money in a year? If so, great, sign me up. If it's 1 week, I mean, yeah, it's cool, but I'm a long-term investor. So when I look at a long-term investor, let me get to the point, Henry. SoFi Q4 came in above estimates, came up above consensus at about 13 cents. And market reacted bad, but what I think happened was really just the jobs report was pretty bad. There's a lot of layoffs, so highest amount of layoffs since January 2009. And I think that's why SoFi actually ended up, man, the weather is so tough here. It's like negative 16. I'm getting sick, but SoFi under 20, man, you gotta be kidding me. Day or yesterday, the unstoppable business model, unstoppable, literally. Because higher engagement generates more data and more fee revenue, which improves underwriting, lowers funding costs via deposits, and boosts margins for SoFi, letting SoFi reinvest into better UI and UX, more products, more marketing, and basically they got that flywheel. They got that bicep over tricep going on, man. They got that bicep over tricep going on. Not right now, we're feeling a lot of pain, but look, no pain, no gain. Are you going to be one of the guys or some of the women that I love as well that are a part of my community? Are you going to be one of those men or women out there that's going to take advantage, take the opportunity to invest in a stock that has sold off? Or are you going to look at a discount? You're going to look at that discount, and instead of smiling, you're going to get upset and say, wow, this thing is down a lot. I'm scared. No, I'm out of here, man. No, I don't want none of that. If you don't want none of that, you might as well just quit investing. If you can't handle the heat, then don't be in the kitchen. Don't even come out here trying to invest, and then you see the market's down and you're not investing. Then what are you doing? Why are you watching all these videos on YouTube? You're watching other people's videos, right? Well, what are you doing? They're not going to help you. They're not going to help you in the slightest because you need help right here. First of all, with me, because I'm the best option coach in the world. I am, factual. And then the second thing is you can't be getting emotional. You got to invest right now. That's what I'm trying to get at. I'm trying to piss you off because if you're out here scared, I get it, but man, when a stock is down this much, this is not when you get scared. This is when you get aggressive, okay? Here, when you're getting aggressive, man, and watching your 50th SoFi video, oh, this thing's going to the moon. No. Double down right here. This is when excitement happens. This is when you should do the extra overtime at work and try to get that extra bonus so you can put it into the market. and dollar cost average and buy at a good price, like literally. Sorry if I'm ranting. Let me keep just going here. Next stock is AMD. All right, so let's go to AMD here, which is my third stock. I did really well in my community with AMD. I talked about it 100. We did an option trade, which